The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, everyone. This is Larry Pesavento for TFNN. If you have any questions, it's 877-927-6648. And I think we should start out with the disaster du jour to start out the show, and that is with the TBT. We have gapped down. We're not too far from the stop point, but we're probably going to get there. The reason for that is that if you look at the long-term 30-year chart on the TBT, on the 30-year Treasury bond, going back to 1981, we were looking for the price to get up here to 150. We're very, very close to that now, and whether we go, crashing through it and go incredibly higher than that, will remain to be seen. The fact that the market has held up this well with the the market, being, down, and it looks like the end of the world in the interest rate market, means that this literally could accelerate, to the top part. And many times when, markets have been in these long-term trends, they do have a blow-off period. We got a call from David in Florida. Are you there, David? Hello?
Can you hear me?
Yeah, I can hear you, David. What can I do for you?
Hey, thank you for taking my call. You guys might think I'm nuts, but I think it might be time to short the dollar, because unless I'm looking at this wrong, it looks like it just completed a butterfly pattern. And looking at the dollar index on Forex market with X point, looks like it's on January 13th at a high of 81.78. And it looks like the A point would be February 29th, this being a leap year, with a low of 78.09. That's your A point. Looks like your B point is March 15th, high of 80.03. C point being April 3rd with a low of 78.66. And it looks like the D point might be today. It looks like it did a 1.27 expansion of the X to A move, as well as completing a larger ABCD pattern that came in at a 1.27 expansion of the C to D relative to the A to B leg, with the A point being back in August 17th of 2011. I'm thinking about shorting the dollar, which I realize, Tom, I think I'm nuts for saying that because he's extremely bullish on the dollar, but we've been just going up and up and up, and nothing goes up forever. And I was just curious for your input.
Well, I posted into Tiger TV, and the description of it was absolutely perfect, David. We've made a butterfly pattern up here at the 83.03 level. And, shorting it there is not too bad because it trades a lot, less volatile than the euro, because it's 53% of the euro. And so that's not a bad trade. I mean, it's up like 17 days, but still, frankly, it's right at a pattern, and this is what you're looking at. If I weren't already in the TBT, I would be doing it. Remember, I had that TBT setting there for many, many months, and I wouldn't say I wouldn't have gone into it at 1680, like I planned. I'm underwater a point right now, and my problem is that I'm not sure, whether we're going to blow off even more. I mean, interest rates could go to 2% in the 30-year bond, but no question about it in my mind. I've been doing this for a long time. I don't understand fundamentals, but I understand technicals. And what goes up, what comes down. And this thing's been going up for 30 years, and it's just about time, for people to start paying higher interest rates. So we're going to see what happens. And the dollar's in the same situation. But if we clear, 83.50 in the dollar could go to 100, without, any problem. And it could be parabolic if something comes out that, money is not, wanted in Europe or, any reason, it could be. But that could literally, go straight up. So you've got to be real careful and make sure you use a stop.
Yeah, that's the big unknown, is the situation in Europe, and it's extremely, to your point a minute ago, it's extremely volatile over there. And I took your trade on the bonds there with a short stop. Got in a little bit lower than 1680 because it just was late on it. It kind of worked out to my favor, being late. But nonetheless, I don't know, Larry. I think, and I certainly am not the trader anywhere close to the trader that you are. But it seems to me like I think we might have a bounce in the market today. Tom, on his insights report, seems to believe so as well, and might give us a chance to either get back to even or who knows. Stranger things have happened, Larry. This is kind of a crazy environment we're working in right now.
Yeah, actually, the stock market does not look nearly as bad as, the euro market that, looks absolutely horrible. The euro is the one-side trade. There's no one looking, for the long side of the euro. That could be, where it could bounce just because of what the dollar index is doing, but it's still, early in the day. And no matter what, we are going down in the euro. No matter how much it rallies, it could rally 6-7 points from here, but we are still going down. The long-term charts on the euro have broken down, very, very badly. They've broken down on the British pound. We've been saying that for a long time, so there's no question that we're heading down. It's just a question of whether we do it now or whether we wait until we get through this full moon that comes in on the June 4th, and that's the scenario that I've been waiting for.
So you believe, I was catching your show last week, so you believe strongly, given the data that you're looking at, that depending on what the market does, hopefully we'll get a nice little bounce here and set up a larger correction that on and around June 4th, depending on how the market's doing, it looks like from an astrological standpoint that would be a good time to short.
Well, what I'm watching, David, and I've referred to it several times over the last few shows, is that, on September 26th of 1987, we had a solar eclipse very similar to the one that we just finished on the 20th of May. We bottomed on that Sunday, and then we went up into June. Hopefully we're going to be going up to sideways into June 4th, and that would be equivalent to what happened in 1987 when we went from September 26th into October 4th, which was the full moon, and then that was also a lunar eclipse, which we have on June 4th this year, and then the market really melted down. Now, I'm not in the business of trying to predict crashes, but this cycle is lining up, very, very similar to that one, and with bonds, going, ballistic today, and everybody wanting, some type of a flight to quality. And given the fact that, we're having this flight to quality with the Dow down only 150 or so, I mean, that's really, not very much. And so there's probably something else out there that is, going to make interest rates even go lower before they finally turn around. But frankly, this is similar to what we had when we had silver at 49 cents and Apple at 627. These are parabolic moves, and they can go parabolic for, many days, sometimes even weeks. But, when it does turn, we will get it. Whether we lose on this one or not still remains to be seen. But, we will catch part of it when it finally does turn over.
Okay, understood. Well, Larry, thank you for taking my call. One more quick question. How's your friend Dr. Miller doing these days?
She's doing absolutely fantastic. She's got a birthday coming up on the 16th of June. And she'll be 89. She can't drive a car, but she can trade. And she says, "Well, I've always liked trading more than I like driving a car anyway." So she's doing well. And then it's just been she's in a assisted living place now, and she's the only trader there, of course. But she's trading every day and enjoying it very much. I talk to her at least several times a week, and she's doing great. Thanks for asking. I know she'll like it. And she's finishing her last book. And when it's done, I'll let you folks know if you have an interest in it. But she's a very special person in my life, for sure.
Well, it's been my experience. If you're a good trader, Larry, you don't have to drive because you can pay someone else to drive you around.
She doesn't even like to travel that much.
Thanks for taking my call, Larry.
Okay, thanks for calling in, David. Okay, now getting back to the TBT, what we need to do is to keep a stop working in there at $14.80. Per share, and if we do get stopped out of it, we'll look at it again at another time. The $64 question is what's going to happen into this time frame of the 4th. I wouldn't have been surprised if we saw this action on June 4th or something like that, but the fact that it's coming in early this week, it's anticipating something that is going to be not very positive. And, I have been bearish this market for a very, very long time, and I'm looking for much lower prices and some type of a surprise in the next 6 to 5 or 6 trading days. And, whether it's going to be the jobs number that comes in on Friday that says, no one has a job or everyone has a job, who knows? All I can say is this market's been going down. The world markets have been going down for months. We've been, featuring that, for a long time, whether it's Shanghai, Hang Seng in Hong Kong, the DAX in Germany. They're all going down. And so we have to be able to realize that the trend is, going down, and it's starting to accelerate, folks. And this time frame that we're in between between May the 20th and June 4th is very similar to what happened in September 26th to October 4th of 1987. We've talked about this, and I posted it in the room many, many times about what happened during that time, and whether it occurs or not, I don't know, but it's been 25 years, and not many people were around when we had a crash. Now, a crash in dollars and cents usually means about 10% or more. In other words, you'd get a 10% drop, in the Dow Jones of, say, 1,200 points. Now, people, say, oh, that couldn't happen. Well, we had a flash crash of 1,000 points in May 2 years ago, on May the 8th. And so, that's it. I'm not trying to scare people. I'm just trying to alert you to what happened, and the markets repeat themselves over and over again. And when we have a repetition of what we had in 1987 and it's occurring now, we should pay attention to that. And the market's not acting very bullish. I mean, it's not acting too bearish, in my opinion, from where we are right now, from May 20th, but it's not acting very, very bullish either. We went up to that really strong resistance that we talked about several times at that 1335 in the S&P 500 futures, and it has, never went any higher than that so far. Okay, we've got a call from Rick in British Columbia. Are you there, Rick?
Hey, how you doing, Larry?
Well, I've had better days, but, every day above ground's a good day. What can I do for you?
Well, I'll just show you something. I'm going to ask you about the TBT and then the euro, but and maybe correlate it a little bit. But if you put the TBT on a 15-minute chart, 2 days, the TBT, and I've seen this happen so many times. You see the first bar today?
Yes, the big gap down.
Yeah, and that did a doji. And I've seen it so many times where that is a halfway move from the gap, and which would, you just measure basically the gap. But I would buy it just above the gap if it drops down to, I don't know, I didn't do the math on it, but 60, say 55 points or whatever. So it looks to me like this TBT could go down to about 1540, 1545, and that's where I'd be looking to play it for a bounce.
Oh, it could certainly do, but when you get on a 15-minute chart of something like TBT that, doesn't trade, but during the, the market hours, it's really hard to make an assumption
that's true.
Like that, in my opinion. It's better to
okay, well,
take a look
see.
at that.
Yeah, we'll see, but those, yeah.
Yeah, would you stay with me, Rick? We've got to take a little break here to pay
In
a few
just
bills.
December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the Money Game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the Money Game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back with Rick in British Columbia. Are you still there, Rick?
I am, yeah.
Okay, what I did was I posted the 60-minute chart of the 30-minute T-bond, and it shows that it has a 1.618 expansion up to that 150 level. That's less than a point from where it is right now. If it just makes that level and doesn't go through it, which is our ultimate long-term objective, that means our TBT trade would still be viable. In other words, it won't get down to the 1480 stop point. But frankly, it's a coin toss at this point, because if we get something really bad overnight, coming out of Europe or some other place, the interest rates could go to, like Tom said, they could go to 160, which they certainly could. And people, if you think that's good, folks, you better reevaluate your thinking, because what that means is that the people, just basically what they're doing is they're just issuing credit from the government, and we're $1.2 trillion more than we're paying back right now. So it's funny money. People are not seeing it that way, so that's not important. The fact that the market is still going up, I believe this is going to be, a very interesting market when it finally does top, and we will get it. But the question is, we'll have to see when the final top comes in. But we're over this really strong cycle stuff, and we'll know here in the next few days, where it's going to go. But it could go parabolic, and much like silver did, and we were watching that back in April. 29th of last year. And we also watched the gold go parabolic. We watched Apple go parabolic, and we all know how they end. And we will get part of it on the down move because, believe me, I'm watching it very, very closely. So,
well, and Larry, that's why I mentioned to you the euro, because it looks to me like we should go down to the, like I look at the FXC for volumes, and I know it's an ETF, so sometimes it's not, ETFs can fool you, but, you know, it looks to me like the euro should go down to 120, you know.
Well, 118 has been our long-term, you know.
Is that the low of 2 years ago, 118, Larry?
Something like that. It's been going down forever. You know, it was bearish at 160. It was bearish at 150. It was bearish at 136. It was bearish at 133. We broke down badly, as you remember, at 130, you know, several weeks ago. And, you know, these are the targets that we're looking at. But this is the most popular trade on the street, Rick. You know, I mean, everybody wants to be short the euro, so you got to be careful. Sometimes they come in and, you know, really surprise you.
Yes, the littlest bit of news, yes, I agree with what you're saying. Thanks, Larry.
Thanks for calling in, Rick. I appreciate it. One other thing that we want to talk about, hopefully we'll get it in before the break, and we will, is the fact that these commodity prices have been dropping, you know, rapidly. We've broken below the 61% retracement in the crude oil contract at 88.80. You know, we've been suggesting that it was going to go to that 88.80 level, and now we're trading $1 a barrel under it. And so that's another reason, you know, why we're under this deflationary environment of, you know, how things have held up. Now, the gold market has actually held up, you know, at least for today, it has held up somewhat because we have made a retracement, a very interesting one. If you get a chance to go into Tiger TV, there's a situation going in gold now that you do not see very often. And that situation is that over the past year, we have come down to the 61% retracement. In fact, it's been a year and a half that we've come down to the 61% retracement level by, I think this is the sixth or seventh time that we've hit the $1,522 per barrel per ounce level in gold. And that's the 61% retracement coming off of the February 2011 low up to the high of that we hit at the 1532 level, and now we've come down. This is the 1, 2, 3, 4, 5. This is the sixth time that we've tested the 1522 level. Right now, the gold is rallying against you know, the rest of the market, so it's held up pretty well. Silver has done also the same thing. Silver is actually, you know, holding up well also, considering the rest of the commodities, you know, that are getting hit. But we must keep in mind that these commodities have, you know, been telling us that this market wanted to go lower just because of the similarities that we had in 2007 and 2008. So you just try to use some common sense. You know, it'll eventually get to the point of where we're going to be. We've got to pay a few bills here for Tom, and then we come back. I want to talk a little bit more about the stock market and this scenario of the cycle that we have coming up between May 20th, the solar eclipse, and to June 4th, which is the lunar eclipse. So when we get to that, we will certainly be looking at that when we come back.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman wave. Well, Basil has just announced a one-day online master trader course where he'll explain his Chapman wave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, folks, if you have any questions, it's 877-927-6648. And into Tiger TV, I have posted the Bradley stock market model, superimposed over the Dow Jones Industrial Average, and it shows, pretty much what it has predicted over the last, 6 months relatively well, and it has a good history. It's not a PhD in economics, but I would put it up against anybody, Nobel Prize laureate or what, because it does do a good job of telling you, where these times of fear and greed come into the market, and we are approaching a time period. If you'll take a look at the red line that I focused on from the solar eclipse of May 20th, and I'm expecting, the market to at least go sideways into June 4th, but I'm expecting a very, very nasty market between June 4th, which is the full moon, into the 25th of June. That's what I'm looking at. Then after that, we've got a period of about 10 weeks where we have a pretty good rally that goes into early August. It might be a summertime rally, or maybe it'll just totally melt down and everything will be different. But right now, this is what we're focusing on, is that we have a possibility of this occurring, of a downdraft from June 4th into June 25th. This has all the similarities of what happened into 1987 between September 26th and October 4th. Of 1987. Between October 4th, 1987 to October 19th, of 1987, the Dow gave up 44% in those few weeks, 19%, actually 16% on that last day, which was October the 19th, 1987. There was another similarity at that time, and that is that this was caused by a currency discrepancy because Secretary Baker was unable to make some arrangements with Japan. And Japan was by far the leading country at that time because their stock market was on its way to 39,000, and we had started a pretty substantial bear market at that time. So there are a lot of similarities. It might not work, but we want to protect ourselves from the long side here, and if it does work, we have a pretty good chance of making something on the downside. The only problem that I see is the fact that the bonds are so strong today, with the market actually holding up relatively well. I would expect the bonds to be up 2 points, when they have something like euro leaving Greece or something like that. It might be coming, but there's a mad dash for safety into Treasury bonds. And remember, they've already been downgraded by Moody's, so it's not a foregone conclusion that this thing is going to be etched in stone. Frankly, with my experience, I think I've lost. With my experience of looking at this over the years, I can never remember one that looks this easy as far as a technical basis with this beautiful butterfly pattern that we have here. It's just really phenomenal. That's the main thing that I can tell you, that it's really something that you don't see very often, but when you do see it, it gives you a chance to to possibly profit on something that will give you a lot of income for your family over the period of your lifetime. As a matter of fact, in 1986, when I was first doing these things that I were watching these things, I had a situation where I was long the Jenny Mays, and this was the first bottom, right after before the crash, and I actually missed the trade by about 3 pips because I had left the office, and I had an order setting there, and it didn't quite get there, and the market had a tremendous rally, and from that point, I was not able to get to where I wanted to be in the trade. I missed the first $10,000 or $15,000 of that Jenny May move, and this was when interest rates were high and going lower. And now we're at a point where we're doing just the exact opposite of this, and so this is what we're trying to accomplish. The situation in gold. I had a question. Someone asked me the fact that we've hit this bottom at $15.22 per ounce in gold. Why it's important. It just can't go below it. And the other markets have been hit really bad. If you look at coffee, cocoa, sugar, everything we've covered on the commodity show that we do on Thursday, has been pointing down for such a long time that it's really amazing to the fact that these things can actually continue to go and not make it to the upside of any type of a rally. And sugar, coffee, cocoa, cotton has given up 70% of its move from $2.20 a pound. It's now trading at around 70 cents per pound. That's just to give you an example of it. We now have gasoline is going to be very, very close to under $3 a gallon very quickly. In parts of the country, it's already selling for $3.30 a gallon, and so we could be there, quickly without, further down move. And now we've broken support in crude oil, and that's another indication that things are starting to move. Now, gold could very easily, it's only rallied, $20 or so from the bottom today, but if it does go below that 15.22 level, that is going to signify some really lower prices in gold. So just remember, we've talked about that, many times, over the period of, the time I've been on the air here, at least the last few months, and it has certainly, made a bad move to the downside. And that's it. Unfortunately, I have a technical problem here. I don't know if the folks at TFN are aware of it, but I have lost connection to the den, so I can't see the questions coming in if there are questions coming in, and I'm not able to post charts. This is a problem with not the connection, but with my computer. So I'll just continue to talk about what I think the things are important. I want to go to the euro here and talk about this because everyone in the whole world, I mean, I watch a little bit of Bloomberg and CNBC every day just to get a feel for what people are looking at, and everybody is on one side of the euro now. Everybody knows that it's going down. Some people are talking about 100. Some people are talking lower. Some people are talking about 118. All of those things are telling us that it's, going down. The question is we could get a vicious rally in here. If we do, there'll be a selling opportunity. But, selling weakness has not been a very good strategy for me over the years. So all I would do to suggest is that if you are, short the euro, at least put a stop 100 pips away or something, because when it does rally, it will rally with a lot of vengeance, I would think, if in fact that it does, and then we'll see. The chart that I posted into Tiger TV with the Bradley model, that's basically, it is a way of measuring fear and greed in the market, based on the cycles that are there. Some cycles are positive, some cycles are negative. But remember, we've been watching this for months and months, years and years, ever since I've been on the show here, which is about 5 years. And it does do a really good job. And all I'm trying to tell you folks is that from June 4th to June 25th, June 25th has a very, very negative connotation here. And at any time, we could start this move, and it could be precipitous. And if you remember, in 1987, the market went down from October 4th to the 19th. That was 15 trading days. Well, from the 4th to the 15th takes you out to the 20th of June, and then we're expecting the bottom to come in between the 23rd and the 25th of June on the Bradley model, and then we will see what the market will do from that point. Maybe the euro will not be involved with either Spain or with Greece at the time, or maybe they'll put it together and they'll say they are still going to be hooked together for a while. No one knows what that means. All we're doing is we're looking at the technical nature of the market, and this puppy looks like it wants to go lower. We've been saying it for a long time. The hope is that we really get a chance to get a rally into June 4th, and then we would have a really good chance to see what was happening, and then we'll go from that level. We have a question from someone. It's about the possibility of going down into June 4th and then the Bradley inverting at that time. That is certainly a possibility, and if we take out the lows of the solar eclipse, which was on May the 20th, and that low in the S&P on that Sunday night came in at 1288, and we're about 28 points from there now, and that's only a heartbeat in this kind of market. If we go below that, that's most probably what it's going to do. It's going to go straight down into the lunar eclipse of June 4th, and then from that point we might have a bounce. The other scenario is, and this is a possibility, is that when we get to that lunar eclipse, that it starts to accelerate. We haven't had one of these, what we call, I hate to use the C word, but it's been a long time since we've had a crash scenario, and we've got something set up that is very, very scary out there. There's something ominous in the markets that would make people buy bonds and want to have these interest rates at that point. The other alternative, and I don't know if this is true or not, but someone sent, because they knew I was not in the happiest mood today when the bonds were going up, and I knew TBT was going to go lower, because I get concerned when I make a recommendation like this and it doesn't work, and believe me, I've made them before. But the gentleman said, he said, well, this is a good way, to put in false stories so the people that are long these bonds have a reason to finally get out of them and, run the market up. I don't believe any of that stuff, because that you start believing in the ideas of conspiracy theories and stuff like that, it doesn't work very well, for anyone. So my suggestion is that we hold in here at least until Friday, and I suggest being short on Friday because I would be expecting a move down coming in on the 4th, which would be the lunar eclipse. And if it doesn't move down on the 4th, you can stand aside and wait to see what the next pattern is that evolves. But the commodity markets have been going lower. The Bradley market is pointing down. Every stock market in the world is in a bear market. We've been mentioning that week after week, month after month. We've had lower highs, lower bottoms in all of these markets. Asia, Europe, China, and we mentioned that China has been the weak sister of the whole group, and that continues to be the case. They're having more problems there than they are in Europe sometimes, is told, but we'll have to. The final tally will be told, when this final cycle is over. But they are having, really significant problems, on the downside. So by the way, tomorrow we're going to focus on some of the grain markets because we've had some incredible moves in these markets, and they're starting to tip over, and that's with very, very bullish news. And so we need to discuss that tomorrow on the commodity show, but we'll save it for that. But all the commodities that we look at, gold is actually the only one that's holding the support so far. Gasoline, heating oil, crude oil, sugar, cocoa, coffee, cotton, all of them have just absolutely been decimated. This is what happened in 2007 and 2008, and so we must keep an eye on that. The $64 question is, why are the bonds, running so much? It could be that they're just making this final target. The answer to that, I don't know, but I do know that we should be able to find out what it'll be doing in the next few days, especially when we come into Monday. We've only got 2 more trading days before we have to face the Monday. We have Thursday and Friday, and then we have this big jobs report that could be a real killer, saying that, we're not having as many jobs, and I don't think that's even relevant anymore, but it's enough to move the market, a great deal. So that'll be an interesting thing to watch. But you want to be short, I believe, when you come into this market on, Friday, and that would be the main thing. It's really not going down very much, given the fact that, the bonds are up 1.5 and they hit our target within just a few ticks. Whether we get stopped out of the TBT or not, who knows? I've been through this many times on these trades of the year. I've been doing them since 1999, and the one that I sweat the most was when I was buying the Nikkei at 7,000, and it went to 6,980, 6,900. 6,800. It went 200 points under where I wanted to buy it and stayed there for about 2 or 3 weeks. Never stopped us out. Our stop was about 100 points away from where it went to, and then it took off and tripled in price over the next year and a half. Now, I'm assuming something like that is going to happen to the Treasury bonds, but, that remains to be seen because there's so much more time to go, and even, in fact, if we are going to be right, we have no idea. So we have a little break here, and then that's the end of the show, I guess.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
See, what we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakouts gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, and we've got a call from Mike. Are you there, Mike?
Yeah, hi, Larry. Good to hear your voice.
What can I do for you?
Yeah, I got a quick question, and thanks for everything you do. On the bond futures, is today the last day of trading for the June contract?
No, it's not the last day of trading, but what they're doing is the people at the Merc are afraid of everybody coming to at the front door at once, and they don't want to have any problems, and so they've alerted the clearing members to get people out and roll them over to the September as quickly as possible. In all my years of trading, I've never seen them do it this early. Usually they go into the first week. They've already moved from June to SEP as the lead contract, but you never had any chance of delivery, and the fact they were scaring people, I'd never I had never seen that before, so it was interesting to see what was happening.
If you're short that contract, would that give you any concern, or could it become?
No. All it is you just buy back the June and sell the September. I've been selling the June anytime it got up to that 148.16, 148.19 area. That's where our hedge fund took our position. We put we got a 3-point stop on that, so it's got to go about 150, 115 to get us out.
But
that's what we did.
You're still trading.
Yeah.
You're still trading the June contract. You're still trading the June. You're still trading the June contract.
No, we're in September now. Yeah,
you are in September.
We're in September. It's trading about 16 points or so under the the June, but it doesn't make any difference now. Just switch over to September.
Okay. All right. Thanks, Larry.
Okay, thank you. We got a call from Jim in Palm Harbor. Are you there, Jim?
Yes, I am, Larry. I've been shorting the E-mini. My timing has been terrible, and I'm just looking for some hints on how to do that. Basically, the other night I shorted at 13.19, and I missed, went to sleep, and ended up missing the stop, and then put a stop and took a 6-point loss at 13.25.50 yesterday. Mm-hmm. I wasn't around in the afternoon, so I missed the spike over 13.30. But last night I shorted at 13.26, went to sleep, had a stop in at 13.25, and you know.
Yeah, and then a report came out. Well, your problem is twofold. A, you're sleeping. You're not supposed to sleep if you're trading. No, there's nothing you can do about that. What I would suggest you do is maybe trade a longer time frame. Don't go looking at a 5-minute chart or something like that. Go to your half-hour chart and look at your major resistance, like we had up at that 1333. We had the big ABCD level there. But when they have these big moves like we have early this morning where the market rallies 10 points because of a report or because somebody says something, there's nothing you can do about. But when you're sleeping and you're trading shorter term, you shouldn't have a position on, Jim. It's just too volatile to do. So either you decide to sleep and trade or trade, one of the two.
Okay, I was going to ask you how you handled that over the past couple of days.
I've been up quite a bit. I was up most of the night last night because of the position we have. We have a position of short euro, short pound, and of course long the bonds. And we were more concerned about the long bonds, and the other ones were working okay. But the problem that we were having is the news shouldn't have had bonds to where they were, and so there was a lot of smart people out there, smarter than we are, that are buying bonds. So, we have to decide, whether we stick with our program or we stand aside, and we decided to, stick with our program, right or wrong. We're going to use this technical level of 150, 115 to bite the bullet. But, we really don't lose any sleep over because it's a really small percentage of what we're risking.
What about the E-minis really quick? I mean, if we break through this 3...
Well, the E-mini stopped exactly today, the 618 off the low we made just a few days ago, as long as they can stay above 1308. If they could close around 1323, 1325, that would look pretty good. But, the market hasn't fallen apart yet. It could at any moment, but it held.